Welcome, I'm Cody Charnell, multifamily real estate broker here in Long Beach, and you're watching the #1 YouTube channel for information on multifamily real estate here in Long Beach and surrounding cities. Today, we're going to be talking about our Q3 2022 market study. This market study focuses on cities basically all throughout the South Bay down to Long Beach. So think all of the cities from LAX down to Long Beach. And we're going to be talking about some key metrics that you want to know if you're investing in multifamily real estate, specifically cap rate, gross rent multiplier, price per square foot, price per unit. So if you're ready for some data, you're in the right place. Let's get into it. All right, so if you get this market study from us, this is what the spreadsheet is going to look like. I'm going to run through it really quick just to show you what's included and kind of how to use the spreadsheet. After we take a look at this, we'll jump straight into charts where you can see trends and changes quarter by quarter. But let's take a look at this spreadsheet really quick. So you can see on the left-hand side here are all the cities that are included in this market study. So like I mentioned, this is basically all cities if you think LAX airport down through Long Beach. So all South Bay and Long Beach cities. We show number of sales, average gross rent multiplier, average cap rate, price per foot, and price per unit. And as you can see, some of these cities have very few sales, so the numbers aren't going to be as averaged out as in some other cities. Like El Segundo, for example, only had one sale, so not really a big sample size to choose from there. So keep that in mind. Also, what's cool about this market study is if you click on these cities, let's go to Long Beach. Long Beach has by far the most multifamily sales every quarter in this market area. If we click down on this area, the market study actually shows you neighborhood by neighborhood where those different sales were and what the numbers look like. So you can see Belmont Shore, which is an A area in Long Beach. It's trading at a 24.3 average gross rent multiplier. And this is based on the current rents. So a lot of these properties do have upside in rents. But you can see an area like that trading at a much higher multiple than, let's say, downtown Long Beach or Alamitos Beach, trading at 15.7 times gross. So you can kind of see neighborhood by neighborhood what an average gross rent multiplier might look like. And maybe this will help you adjust your investment plan accordingly. What's also cool about this market study is if you scroll over to the right, we have the numbers broken out by 2 to 4 unit properties and 5 unit and up properties. So as we know, 2 to 4 units use residential financing, 5 and up use commercial financing. So interest rates, as they change within those 2 different loan types, will probably affect pricing differently. So it's cool to kind of split out the 2 to 4 versus the 5 and up. All right, so before we look at the charts for the market study, I just want to set the scene with what's happened with interest rates this year. So the chart we're looking at now is on the Federal Reserve website. This is tracking 30-year fixed mortgage rates, and this rate is something that you'd see for probably a single family owner-occupied loan. When you're getting into the investment loans in the 2 to 4 unit space, rates will be usually about a point higher than this. And if you're looking at rates for commercial properties, so 5 unit and up apartment buildings, they'll typically be a little bit lower than this rate, but rates will generally move in the same trend. So it's important to kind of track what's happening with the 30-year fixed residential rate that's on this website. So going back to the beginning of 2022, here we are, January 6th, rates were at 3.22%, which is historically low, as we all know. And since the beginning of the year, they've climbed all the way up to 6.92%, which is where we are today. So Q3 cuts off at just everything that closed before September 30th. So a typical escrow, residential escrow is 30 days. A typical commercial escrow is 45 to 60 days. So all of the properties that are included in our market study opened escrow before September 1st. So it's important to keep that in mind because let's go back. So the biggest spike in interest rates that we've seen recently really started on August 11th. And let's see, September 1st, rates were at 5.66%. Since then, they've climbed all the way to 6.92%. So The data that we're looking at in this market study is rear facing, and rates have increased about 1.5 points since then. So these latest rate increases won't be reflected in the numbers, but in Q3, we still have seen, properties closing at higher rates than we were at the beginning of the year. So most of these properties probably saw rates in the 5 to 6% range. So still really good data to keep an eye on. Okay, so let's take a look at the charts. All right, so let's start with number of sales. So this chart tracks the sales volume going all the way back to 2013 and shows quarter by quarter changes. And as we can see for the third quarter 2022, we trended down slightly, but really not significant compared to what we've been seeing over the last few years. And like I mentioned earlier, this is more of a lagging indicator. So these are closed sales. What you would want to track more forward-looking is number of active listings, number of new listings. If we were to see inventory starting to pile up and not enough supply to absorb the inventory that's hitting the market, that's where you might see bigger changes in prices. But as of right now, things are holding pretty steady. This latest kind of jump in interest rates that occurred, since September 1st hasn't really been reflected in these numbers. So we'll have to wait until Q4 to see how that shakes out. So next, let's talk about gross rent multiplier. So really same sort of story as number of closed sales. So really right in line with where we have been, trending down slightly for the third quarter of 2022. We ended the quarter at just over 18 times gross on average. Keep in mind, this gross rent multiplier is based on current rents. So some of these deals have upside in rents. You can get properties that will perform at better GRMs than this, especially when you capture that upside in rents. And also keep in mind that gross rent multiplier, the equation is price divided by gross scheduled income. So the lower the gross rent multiplier, the less you're paying for each dollar of income that a property produces. So if we were to see the gross rent multiplier crash, that would mean property values are declining. All right, so next up, let's look at cap rate. So cap rate is trending up slightly. And the equation for cap rate is net operating income divided by price. So a higher cap rate means lower real estate values. So really it's flat for Q3, from Q2 to Q3 2022, not a significant change. If we were to see cap rate spike up, that would mean real estate values are declining, but really we haven't seen that. So next up is price per foot. And as we can see for Q2 to Q3, things were basically flat. What's interesting about price per foot is it indicates obviously prices going up, whereas cap rate and gross rent multiplier are just metrics comparing price to income. So you could have flat GRMs and flat cap rates, but still have properties appreciating if rents are going up. So price per foot's an interesting one to look at, as is price per unit. So price per unit down slightly for Q3, but really not a significant change. So in summary, not huge changes from Q2 to Q3 this year. This latest spike in interest rates may start to show up in our Q4 numbers, so we'll have to keep an eye and see what happens there. And if you've been following my YouTube channel, I post economic update videos every 2 weeks. And in those updates, we cover key metrics like number of active listings sitting on the market, number of new listings, days on market. So if we start to see inventory piling up, it will show up in those metrics first. But so far, not a lot of distress in our market. Things are holding pretty steady. So hope this was useful. If you have questions about multifamily real estate, I'd love to hear them in the comments. I'm Cody Charnell. Happy investing.